About Hitachi Energy, but before that, let me go to Anushi to try and figure out the extent of the strength in the Q2 numbers and the reasons thereof. Anushi.
Right. So if you look at the numbers, very strong set of numbers that we are seeing in terms of Hitachi Energy revenue growth of around 27% at 1,620 crore with the margins. Margins is the key highlight here in the results. We've moved across to 10% as compared to 5.3% in the quarter. So if you look at what the management had indicated in its previous conference call as well, that they want to take their margins to the double-digit line, double-digit growth line. So it is something wherein it is in line with that. Net profit stood at 137 crore as compared to 27 crore. In fact, if you also look at the 9-month performance, we are seeing a similar trend in terms of where the revenue is concerned, 27% of a growth here. Margins have moved upwards to 7.94% as compared to 4.71%, and net profit seeing about a 300% jump. But other than that, even the order book positioning of the company has remained very strong for the quarter. This is because of one mega large order that they've received, that is the Khavda-Nagpur HVDC order, which took their order inflows up around 839% at 11,594 crore. So significant growth in terms of both the annual and the sequential basis that we're looking at. With the new order in place, the order backlog has also stood at roughly around 19,000 crore as of December 24. So very strong numbers in terms of where the financial metrics are concerned and what this order will bring for the future revenue visibility of the company also going forward.
Okay, thanks for that. Thanks for that, Anushi. That's very interesting as to what they've done and the dissection thereof. Sudeep, expensive names, some of them are getting clobbered, the likes of ABB, etc., because of adverse news flow. And some are seeing even heightened gains after maybe strong quarters. Hitachi Energy, a case in point. 20% higher for a stock which on a trailing 12-month P is trading at whatever 130 times, 1 year forward trading at some 80 times, still sees some traction like this.
Well, absolutely right. I think, when you are quoting at that kind of valuation, there is no margin of error. So if your results or the news flow around you is not to the liking of the market, you are getting really hit hard. And that's what is happening in case of many of these scripts. However, on the other hand, if the news flow around these scripts, which are quoting at high valuation, and the results are to the liking of the market, I think the market, for lack of other better opportunities, are latching onto these. And, that's the one way to explain this. Of course, in the specific case of Hitachi Energy, I think they are in a sector where there is a lot of traction. And I believe this is a structural change is happening in the entire energy space. And Hitachi Energy being in that space with kind of equipments they supply, and particularly in the transformers and other equipments for the energy services, I think that has a long way to go. They are getting orders left, right, and center, and I think the order flow for these kind of high-tech equipments will continue, considering the demand of power and demand for better distribution as far as India is concerned. So the company definitely has potential, but even I'm scared at these kind of valuations to recommend a buy.
Okay, yeah, and then so viewers, here's the piece. Somebody's buying Hitachi, it's locked on an upper circuit, but somebody who looks at markets very closely fundamentally is scared of buying it. Rajesh Palviar, who looks at it from a technical perspective, also says that it's done its course, and therefore it's very difficult to do this and go out and buy Hitachi Energy at the current prices. But clearly somebody's bought it, as people are buying Suzlon, as it is that people are buying, let's say, Laurus Labs, which is 7-8%. Actually, Sudeep and Kush, come in on Laurus Labs as well before we move on to the next piece. Sudeep, I'll come to you.